this is just the beginning. I mean, we are at 16,000 Dow. Unless they hyperinflate it, which is very possible. Look at what's going on in Venezuela. We are going to revisit the 2008, 2009 lows without a question. And if you do not protect yourself in every way imaginable, if you do not hope for the best but prepare for the worst, you very well may lose everything.
All right, guys, you know why we're having this call. It's Monday, August 24th, and the market opened today with another historic meltdown. There's so much to talk about as emerging markets literally implode. Andy Hoffman's here. Andy, how are you?
Well, I'm doing well. Unfortunately, the markets are not. And you know what? It's not just emerging markets anymore. It's everything that's imploding. This is exactly, I can't say it's happening to the minute or the exact way, but it's pretty much as predicted. The oversupply of everything imaginable in the industrial and commodity sector, and the overvaluation of all the financial assets caused by years and years of money printing and market support is coming to roost. And right now, everything is falling apart. And I can't emphasize enough. This started with the economy of the world already at its low point of our lifetimes, if not going all the way back past the Depression. We're at the worst geopolitical and social tension level probably since World War II, and from a financial standpoint, there is no parallel. You can't even put 2008 on the same map as how bad the debt situation of the world is. So I think what we are about to experience financially and economically is something that, I wrote today, the title of my article was, just like 2008, except much, much worse and irreversible.
Well, let's start from the beginning, Andy. I went to bed last night at 2 a.m. Central Time, and the Chinese markets were down more than 8%, closing in on 10%. I woke up this morning to essentially an historic flash crash. Of course, Zero Hedge notes that the flash crash that occurred back on May 6, 2010 would never happen again. It was an anomaly. And I guess what's really going on is the worst market liquidity imaginable. We can probably thank high-frequency trading for that. Let's talk about
let me just add to that. Yes, the liquidity is as bad as ever because, for instance, retail participation is gone from the markets and the algorithms have taken over. And probably the vast majority of those algorithms are either from the government themselves or from the banks that work with the government. So there's very few players left in the market. As for this morning being a flash crash, it's kind of like everyone trying to blame China for this. Blame the speculators. There's nothing flash crash about this morning. This is called an overwhelming supply of sell orders at the open as people are terrified for their lives, as their financial lives, as they should be, because this is just the beginning. Unless they hyperinflate it, which is very possible. Look at what's going on in Venezuela. We are going to revisit the 2008, 2009 lows without a question. So no, this is not flash crashing. This is terrified panic as it should be. And by the way, it's not panic as in, oh, it's a contrary indication, it's time to buy. It's panic as in finally years and years of overvaluation and market support are collapsing underneath the powers of the manipulators that are supposedly omniscient.
Well, one of the Federal Reserve vice presidents recently just came out, as you know, Andy, and admitted that what they've been doing isn't working and hasn't worked. Now, as you've been documenting for our audience, as we document the collapse here over the past, several years, Andy, that we've been talking, you've been talking about the fact that when the end comes, you will not be able to sell. And I just want to focus on this because, again, according to Zero Hedge, curious why few, if any, traders can actually execute any trades, whether buys or sells. The reason is that despite the relative calmness of the index prints, what is going on beneath the surface is an unprecedented wave of constant halts and unhalts, making it virtually impossible for matching trades to match buyers and sellers. This is what we've been talking about, Andy. The end would come like a thief in the night, and despite Dow 18, 19, 20,000, wherever they want to take it to, the reality behind the scenes is it's just ones and zeros and paper and manipulation, and if you don't have gold and silver in physical form, God help you.
Yeah, and again, it goes back to the term which ironically Warren Buffett made way back when. We're talking about in 2002 for weapons of mass financial destruction. He was referring to derivatives, but all these things, derivatives, high frequency trading, all that stuff, it's all part of the financial engineering that has destroyed the liquidity of the financial system. Oh yeah, that and two major financial crashes in 15 years, which have taken most of the market participants out of it. So again, now that you're talking about a real genuine crash, and again, people are staring at the Dow down 500 points. They have no idea what's going on around the world. We're talking about the average currency. I'm not kidding. The average currency is down more than 90% against the dollar in the past 4 years since the Fed started with its Operation Twist and QE3. We're talking about carnage. There was also 25 stock markets in major bear market corrections before this even started. And then you have all those commodity countries with the commodity currencies who their business has been absolutely devastated before this even started. We're talking about the CRB commodity index is within a few percent of 40-year lows right now. I mean, that's how bad things are. And sadly, 40 years ago when we had these numbers, the fundamentals were better than they are today. But again, whether traders can sell getting out, I really don't care. But what the opposite is, the converse, is that people are not going to be able to buy precious metals, and especially silver. I mean, I don't know how much more I can talk about this from what happened in 2008, then 11, 13, 14, then just this last July where they shut down the Mint. I wrote an article 2 weeks ago after speaking with Andy Schectman, our president and co-founder, saying silver supply at 1.5 or 2 out of 10. That was 2 weeks ago. I mean, we're having real trouble sourcing, especially at the Royal Canadian Mint. And they're selling more Silver Eagles, as many Silver Eagles now at the U.S. Mint as when they shut down production in July. So again, and you can't get junk silver, and premiums are rising. I see they're rising today. I mean, people do not understand. It doesn't even matter what price they put on the screen with these, with the cartel and their naked shorting. You are not going to be able to find silver at all. Just like in 2008, when every mint in the world shut down for like 3 months and the premiums went to 100%. But again, the title of today's article, just like 2008, but much worse and irreversible. They are not going to be able to come in, the central banks this time, and go, oh, we're going to do TARP and everything, and we're going to do all kinds of QEs and stuff and support the market, and everything will be fine, and then that'll calm the precious metals market. This time around, as I wrote last week, my article was called the end of belief that central banks can save us, and the beginning of belief that they are destroying us. They have nothing left. They have no balance sheets left to do anything. If the Fed announces, if of course they're going to, and the Yellen reversal comes and she announces QE4, no one's going to be listening to. No one's going to believe that's going to save the markets and it's going to save the economy. More likely than not, it'll make everything implode further, including the dollar itself. So again, we're at a point. I mean, it doesn't even matter all these other things. Pardon my French, you have to be an idiot to not see how bad the global economy is and how bad it's getting. I mean, look at oil today. My God, it's 38 handle right now. I wrote back in October when oil was $81 a barrel. I wrote crashing oil prices portend unspeakable horrors. It's 38 and it's going to go to 30. We're talking about we're going to have world wars over this. And people are sitting there trying to figure out whether they should buy a few ounces of silver at below the cost of production when we're telling you that we can't even source it. I mean, it's unbelievable. Do something, people. Do something while you still can. And not just with gold and silver. Think about, look at the Dow if you want to, if it makes you happy. It's telling you that the world's falling apart. The Dow was supported by the PPT. It's the most supported stock average on earth. It's down 1,500 points in the last 3 days. They have lost control. Look at the Chinese stock market. It's down almost 40% in the last 2 months. And that's with them lowering rates and saying we put $1 trillion in the market. They have lost control. They are not omniscient. Everyone knows it. The naked emperor is being shown to the entire world in all aspects.
Yeah, I feel exactly the same way. And as I was watching the plummet this morning, the flash crash, knowing that we had this call coming up, I was going to ask you, my first question was going to be, Andy, is the plunge protection team going to save the day again? And of course, before you got on the line, before I could talk to you, they had taken the Dow 600 points off its lows. So is that their answer to everything? They're just going to buy up the stocks? Are they going to nationalize stocks like China has? I mean, China, according to Breitbart, has nationalized over $6 trillion in stocks, trying to stop the hemorrhaging. Is that the plan here, too? Because it's not going to work.
Well, first of all, they have been doing it. Unlike the Bank of the PBOC or the Bank of Japan or the Bank of Switzerland, for that matter, who do it overtly and say, yes, we are buying stocks. The U.S., the Fed, the plunge protection, they buy it covertly. They don't want to admit they're doing it. Eventually, they may have to admit it. But look, again, the Chinese have put $1 trillion plus into their stock market in the past month to save it, and it's free falling. And I assure you that if the Fed does that this time around, no one's going to be listening. And again, what are they going to say? We're doing QE, we're going to buy Treasury bonds. Treasury bond yields are back down to 2%. The problem is not the yield is too low. The problem is that everything is overvalued as the whole world is crashing and everyone is in debt. And by the way, again, you see the articles you read, is the plunge protection team at their back? Well, of course, they're there every minute of every day, just like, look at the gold and silver action today. And gold is up, by the way, as we speak. They're just all over it with the paper, but it's not working. And, as for the plunge protection team, good luck to them, because the selling will not stop no matter what they do. I mean, I haven't seen the stock market act like this since 2008, where you'll see the big jumps up, but then it falls equally fast. Usually, for the last 5 or 6 years, it would only fall very slow. But now you could see them losing control, and I wouldn't be surprised if by the end of the day we're down 1,000 points again. The point is, stay out of all financial assets. I really don't care what the price is, and get yourself into things of safety, both financially and in all aspects of your life, as quickly as possible.
You know, the New York Stock Exchange invoked Rule 48 this morning to try to preempt panic selling at the open. It didn't work. Maybe it did work, actually. Maybe the Dow should have been down 4,000 points out of the gate. Maybe the New York Stock Exchange should have been down much further out of the gate. But, as Bill Holter and you have been reminding us for so long, Andy, the real canary in the coal mine is the credit markets. Can you tell us what you see happening behind the scenes? What's going on in the credit markets? Because when the bond market and the U.S. Treasuries, when everything falls apart in the world's biggest market, that will be the end.
And they are falling apart. I mean, the only thing that's going up in quote credit markets is sovereign bonds, not all of them, but ones like treasuries, because everyone at the moment is preempting QE4, which is coming. And I wrote this morning about how they're doing it under the misguided assumption that central banks can keep rates down forever. I mean, I'm saying, what part of them losing control of every other aspect, from stocks to currencies, commodities, economies, everything, makes them believe that in a historically high level of debt, with historically high money printing, that they're going to be able to keep interest rates down at record low levels. But that's the knee-jerk reaction. Everyone believes that they're going to do QE4 and they're going to be successful. But again, it really doesn't matter. It all comes down to the real economy. But just like you can call the paper silver price or gold price, whatever you want, it really matters how much actual gold is out there and at what price you could buy it for. And as for the stock markets, they're toast. It really doesn't matter what they try. They'll invoke every rule imaginable, and it won't matter, because the global economy will crash. The commodities, they have absolutely, utterly zero control over. The commodities are far more important to their ability to control the world than stocks are, and again, most stocks are in major bear markets right now. Commodities are in a free fall like we haven't seen. Even in 2008, it's worse than that, and it's going to get much worse. And we're going to see, my guess is the fourth quarter, there won't be a country on the planet, including the United States, reporting a positive GDP, and there won't be a central bank on the planet that isn't either actively involved in QE or announcing a new QE, as the Fed will.
All right, so for a long time, Andy, we've been hearing the mainstream Mockingbird financial media tell us that gold is a barbarous relic. They barely mention silver, if ever, and when they do, they say it's an industrial metal that will fall with other commodities. They never equate the two as being monetary metals. And of course, as it relates to the stock market, all we ever hear is it's different this time. It's always different this time. It reminds me of the tulip mania, Andy. It's always different this time, but it's not different this time, is it?
The tulip mania came around, once in generations. We've now had 3 major bubbles in equities occur in 15 years. The first 2 ended horribly. In fact, the second one ended worse than the first one. And what they did after the first one is what caused the second one. And then what they did after the second one was to double up what they did following the first one, which is why we now have like $50 or $100 trillion more of debt, a collapse in global economy, and everyone in the world hates everybody, and particularly the United States. So again, if you had double the fall after the first time and you've doubled up what made the problem the second time, what do you think is going to happen the third time? I mean, I don't even care. I'm not even picking numbers. I'm not sitting here going, the Dow's going to a number. I'm telling everyone that what is about to happen, and in many parts of the world is already well into happening, is going to make 2008 look like nothing. It is going to be so much worse from a real losses that people are going to have in financial assets, from real irreversible losses in the job market. Families are going to be broken up over this. There's going to be wars over it, and the biggest boom of all is going to be the crash of currencies, which went nuclear when the Chinese devalued the yuan, which, as anyone who reads me knows, I not only called back in April, but I called it that morning. I said that very morning the Chinese are imminently going to devalue the yuan. I know what's coming. They are all going to devalue. And in fact, if you look at the currency markets today, it's very interesting, today and on Friday, because while the dollar is getting crushed against the euro and the yen, it really doesn't matter. It doesn't mean anything. But it's exploding higher against everything else, which is what I've been saying all along. All the lesser currencies are absolutely imploding. It's the currency wars in major effect. It's called social unrest. It's called military wars are going to stem from this. And then, of course, now that the yen and the euro are going up against the dollar, what are they going to do? They're going to increase their QE because the final currency war. And then what's that going to do? When the Japanese increase theirs, it's going to make the Chinese increase their QE, et cetera, et cetera. We will have the end game of every currency in the world. Okay, I'm saying every single one will be dramatically, dramatically lower when this is all said and done against items of real value. And if you do not protect yourself in every way imaginable, if you do not hope for the best but prepare for the worst, you very well may lose everything.
Yeah, and that's the key point. Here's what I want to hit on as it relates to the baby boomers. Everybody out there in this country and around the world who does not listen to this broadcast and does not read your material, those that we would call sheeple. In many cases, Andy, it's not their fault that they're not awake. It's because they consume their news and information from places like CNBC, Fox Business, etc. The mainstream media will not be honest with them. Meanwhile, Deutsche Bank sums it all up, and again, I'm going back to Zero Hedge. The fragility of this artificially manipulated financial system was finally exposed, end quote. What is going to happen to the baby boomers and those that have drank the Kool-Aid, those that are on margin? We're seeing record margin leverage being used in the stock market, which previous to this could only go up. What's going to happen as a result of what we're seeing today?
People say, well, the Dow is only 16,000. It got as low as 6,000 last time. Or, the Chinese market is 3,000. It got, 2,000 or 1,000 last time. But again, you hit on the key point. Everything is on margin. I mean, we have never, as a planet, been this margin. We were in 2008 again, and we don't even see half of the derivatives that are off the books. The amount of margin that everyone from governments to corporations, institutions, municipalities, and individuals have is unprecedented. So even the tiniest drop, I mean, what's happened in China is going to destroy it, let alone when it goes all the way back, the Shanghai Exchange back to 1,000. And the same with the Dow. The amount of money that's been lost in the past week is unprecedented. It's in absolute amounts, even with such a small amount of drop. That's why it's so comical when they talk about, the Fed was going to raise rates. The Fed is the most highly leveraged fixed income balance sheet in the planet. Even the tiniest bit of an increase in interest rates would have destroyed it. That's why, there's no way that anyone could afford a higher interest rate of any kind or a lower stock market. Or, for that matter, the biggest one of all, lower commodity markets, because that's where all of the earnings power of the world is. Look at the $500 billion of junk bonds and leveraged loans underlying the shale industry. It's all going to vaporize. By the end of this year, it'll all be bad. And that's just one little aspect of it all. All that margin that has been put on as a result of all the money printing and the Bernanke put and Draghi will do whatever it takes and Abenomics and the PBOC and the Swiss National Bank who won't buy gold, et cetera, all that is going to destroy everything like a big tsunami, wiping out a tiny island.
Well, let me get back to this. Let's just flush this out as it relates to pension funds. As our friend Michael Snyder over at Economic Collapse blog has been reporting, pensions all over America are being savagely cut or vanishing completely. We see unbelievable billions, multi-billion dollar shortfalls for pension funding in Illinois and California, tens of billions. And all of these pension funds are tied to the stock market. All of the hopes of those that want to get their checks when they retire are tied to a stock market that can only go higher. And as we're documenting here, Andy, as we document the collapse, those people have no hope of ever seeing the money they've been promised because they're overstretched and underfunded.
Right. Well, anyone who relies on any institution for money, let alone retirement funds, is going to be toast right here. But again, it's pension funds are mostly it's fixed income. That's what they're invested in insurance companies. And the reason they're so underfunded is because the Fed has kept rates at zero for so long that they can't generate any income. So as a result of that, well, they've done two things. One, they've raised premiums, which is why everyone's premiums on every imaginable kind of insurance, particularly health insurance, forget Obamacare on top of that, and homeowners insurance, you name it, all those things have gone up because they need to recoup the money they can't get from zero interest rates. And it's forced them into riskier investments, one being high yield bonds or higher yielding bonds, and two being stocks at percentages they've never had before. Heck, governments are now heavily invested in stocks and high yield bonds. And so, yes, I mean, a pension fund is among the many, many groups of people that are going to be destroyed. And the scary part is this time, there's no bailouts. Who are we kidding here? Who has any money to bail out? The Fed has $4.5 trillion on its balance sheet, let alone what's off it. Look at Abenomics, what they've done. They have a quadrillion yen of debt. The Chinese have built, I think it's something like 25 trillion of debt just in the last 7 years alone. There's no place, there's no will, let alone any money out there. I mean, if the Fed actually was going to try to do what they did before, 99% chance it results in pretty immediate hyperinflation. And the other 1% chance is inconceivable that they could even try to bail out all these companies without their heads being put on a pitchfork. We're talking about bailing out the financial companies again. Goldman Sachs, JP Morgan, AIG, you name it.
Yeah, of course they are. Now, as we approach September 23rd, we approach the September-October timeline that everybody is worried about with the 7-year Shemitah cycle, the collapse. What do you see happening here as we get to September 23rd and beyond, October being typically the worst month? Before we started the call this morning, you quickly said, let's talk about the sheer horror. What people have been predicting is happening now, the sheer horror.
Right. Well, I mean, I never predicted the Shemitah. I just find it extremely interesting of its timing because, what it's predicting is going to happen is happening right in the timing of the prophecy. So I have no more to say about that other than it's coincident enough that it's of interest. And by the way, yes, it's, the real bad stuff would hit in September. But again, I mean, most of the time bad things happen during the fall because the powers that be usually take advantage of quiet markets when really no one wants to deal with stuff during the summer. And then when they come back from vacation, it's another story, which shows you just how bad things are that they couldn't even wait. They couldn't even get through August before this whole thing fell apart. And again, it's nothing new to hear it from me, how negative I am. I have never been more bearish in my life about absolutely everything imaginable except for precious metals. I truly am terrified. It's not about even the financial side. I am truly terrified about where the world is going. And frankly, it's all the result of the fiat money standard that has taken over the world and for 40 years poisoned it. And then, of course, when it died, when the system was supposed to die its natural death, it was put on steroids in 2008. And here we are where the steroids are wearing out and there's nothing left. I'm telling you, there is absolutely no medicine left. They could have their big Sunday night meeting, with all the big central banks and put out a Monday morning thing. We're all ganging up together to do QE and support stock markets. It's kind of like that Day the Dollar Died YouTube video, but it won't work. People are saying, we'll just be like, you guys are crazy. You are going to hyperinflate immediately. So I don't think there's any remedies. I don't think there's any delay. I don't think there's any chance other than, the markets, they'll jump abruptly here and there. But I think we're in the end game in the biggest way, in every imaginable way. And I think if you don't do something now, while you still can, you're going to run out of chances quickly.
Yeah, and just to round that out, the reason I brought up the Shemitah, and I didn't actually flesh out my thought very well for you there, is that the Shemitah, this idea of a debt jubilee, you mentioned more bailouts for JP Morgan, Goldman Sachs, and the criminal banks. We're not going to see a debt jubilee for humanity, are we, Andy? We're not going to see a debt jubilee for mom and pop and the people leveraged on credit cards, the people that are barely making ends meet. We're not going to see a debt jubilee for the little guy. We're going to see the little guy get absolutely buried. $1 trillion in unfunded liabilities in California government pensions. I found that article, wanted to tell you it was more than tens of billions. It's $1 trillion. We're going to see the little guy get crushed, and of course it'll be the big criminal banks that get the debt jubilee, if that's even possible.
Yeah, and I don't even think that's possible. But but again, it all comes down to the same thing. Debt is not good. And I've had people over the years say, well, what if there's hyperinflation? Does that mean it would be good to have a mortgage, or it would be good to be in debt, or should I borrow money and buy precious metals and that kind of thing? Look, debt, generally speaking, in almost every situation is bad. Debt during a crisis is even worse. And I wrote an article called Debt and Hyperinflation back in 2012, where I showed that during Weimar Germany, the government just indexed mortgage payments to inflation. So, you're not going to get out of it. No. And I don't even think the big banks are going to get out of it this time, but certainly not the little guy. That's why the little guy has to get themselves out of harm's way as much as possible. And the best way to do that is to pay off as much debt as you possibly can. And if you then have some savings afterward to protect at least a portion of them with the only money, or it's the only money in the world, let alone the only that will exist, that will survive and retain its purchasing power, because we are about to go through hell. And, the goal is not necessarily to beat the hell, it's just to survive it. And when you come out the other side of it, which could take a long time, that you did the best thing for yourself and your family.
Yeah, and we're going to finish this conversation now on the precious metals, and I'm going to quantify just a couple of things for listeners. You can't count on a debt jubilee, and you certainly can't count on this dollar currency as being a currency that'll save you moving out into the future. I want to just mention that Nicholas Larkin over at Bloomberg, again, I talk about this a lot. I think it's important. Nicholas Larkin at Bloomberg has talked about $64,000 gold based on the fact that if China ever says they have 10,000 tons of gold, it would justify $64,000 gold price, and he goes into why that would be possible. He's not even talking about inflation or hyperinflation of the dollar. And the other thing I want to mention is that John Williams from Shadowstats.com has a new chart out indicating the current value of silver using the accounting principles he uses, the real accounting principles that the U.S. government used to use under Ronald Reagan. And he says that the current value, the inflation-adjusted value, given all the money printing we've seen, the current value of 1 ounce of silver, Andy, according to John Williams, is $600 an ounce.
Well, it's pretty close to, remember I said way back when, God, 3 or 4 years ago, I said that just simply based on the math that got you to $800 or $900 an ounce gold in 1980, that same math will get you to $15,000 to $20,000 an ounce of gold right now. And that's just based on the amount of money they tell you they printed, not the M3 they don't tell you about and the off-balance sheet stuff. And of course, it incorporates 8,133 tons of gold reserves that the U.S. supposedly has. And, I don't think they have any. And if they do, it's a very small amount of it. And with each dollar that's printed and every ounce of gold that's surreptitiously sold, that number goes higher. So that's $15,000 to $20,000 for gold, and for silver, I've said we're going to have somewhere between a 5 and a 15 to 1 ratio at some point, and that would get you to $1,000 silver or so. That was numbers I said years ago. So we're in the same ballpark, but this is a completely different world, because what's going to happen here is currencies are going to hyperinflate. People are going to get in at any price, and ultimately, if the dollar can, I don't think the dollar can even survive that. But it's going to be priceless. There's not going to be a number. It's going to go far higher than anyone can imagine nominally, and in real terms, that's where where it's really going to matter, because you're going to be able to buy so much more with those dollars in a very scary world. But there is no price to put on it right now. You should be thinking, how many ounces can I get? And again, can't emphasize enough in this very difficult illiquid environment, including in the bullion industry, how you have to be someone who's safe. We've been there 26 years, Miles Franklin. We have not a single registered complaint, an A+ Better Business Bureau rating. Go to my podcast that I did with Andy Scheckman a few weeks ago called State of the Bullion Industry, so you understand what you're dealing with. We will take good care of you. We will treat you like family.
Andy, why don't you shout out the phone number for Miles Franklin for anybody who needs to take action today?
Yes, the number is 800-822-8080, and as always, you can email me at ahoffman@milesfranklin.com.
Guys, our guest has been Andy Hoffman, the Media and Marketing Director over at Miles Franklin, milesfranklin.com. Andy, thanks so much for your time. We certainly appreciate it. You and I have been documenting the collapse for a very long time, and it's certainly accelerating.
Yeah, I hope everyone takes heed while they still can, and we'll talk soon.
All right, thanks, Andy. And guys, thank you for supporting us at sgtreport.com. thelibertymill.com, and thephaser.com. Real news 24/7. God bless. Bye-bye.